Let me walk you through some really interesting trade studies, and I will combine price action, trend analysis, momentum analysis, show you exactly where the best entries are found, and help you get a very deep understanding of price charts. So let's start here, and what we have is the 50 period SMA. I'm on a 15-minute time frame. I also activated supply and demand zones. If you're interested in getting this indicator, check the link in the video description below. And let's look at it now. What we can see here is we have a multi-legged trend. We are starting here from this distribution pattern. We have the first trending leg, we have our corrective wave, trending leg, corrective phase, trending leg. So far so good. So what we have is a 5-wave trend, wave 1, 2, 3, 4, 5. Based on classic Elliott wave theory, on average, this is what you can expect from a healthy trend. Of course, there are some trends who will keep going and give you a 6, 7, 8, 9th trend wave. And there are trends who will be shorter, maybe only 3 or maybe only 4 trend waves. But on average, which is the keyword, this is what we are looking for. So far, so good. Another thing that we can see is that we are running into the round number, 144. A lot of traders, a lot of programs are also using round numbers because they are just so objective. Also, what we can see is this is where the previous trend has started, and we have a supply zone up here. You can see we have 2 red zones here, 2 supply zones. That is great confluence. And what else do we have? Let's activate the daily pivot points. And you can see that we have a healthy pivot point structure so far. After we're leaving the distribution and accumulation zone, we start trending above the pivots. What we see is that if I zoom in, we are trading above the pivot, come back into it to retest it, trade away from it, get back to it as a pullback, trade away, pullback, and trade away from it. Now currently we are trading above the pivot as well. Right now you can see we are here, and as long as this market structure is in place, we are more bullish than bearish. I would not go short unless this pivot structure has been decisively broken. But I want to see what happens here. We have a triple top, so we have a very important resistance level at this key area where the supply comes in, the round number, and also the previous trend high. So let's see in the next few candles what the market is doing. We can see for now we are not being able to break above this. We are challenging the pivot, but this is not a bearish sign yet. We have seen challenges of the pivot in the past, and that is quite normal. So just because we are trading into a pivot, it doesn't mean automatically we should go short. We want to see that we get below the pivot decisively, and then ideally we would like to see a pivot change. We would like to see that the market is trading into the pivot and rejecting it, or we will get a new pivot here. We want to see we move into the new pivot and then reject it on the way down. Also, sometimes what really helps is when we activate the Bollinger Bands. This is the Bollinger Band from the higher time frame, the 60-minute. If you click on the settings, under inputs, you can change the time frame. You can see it's a default setting to length, standard deviation 2, but just the 1 hour. And what we can see is that pullbacks often reach the opposite Bollinger Band as well. So this for now is a normal behavior. But if this keeps going and if we keep trading into the Bollinger Band on the downside for a long period of time and then fail to read the upper Bollinger Band, that would be also a very bearish signal. So essentially what we're doing here is we are collecting bearish signals, as many as we can. And then when we have enough, we are going to go short or look for short entries at a favorable price. So now let's see. We're moving far, far away from the pivot, very bearish signal. And we are also trading for a long time into the Bollinger Band. So that's a good criteria and a good indication if you're looking for shorts. So now I would really like to see the market retest a pivot point. So you can see, also very, very important, let me deactivate what we have. Also let me turn on the supply and demand. And what we can see is that this is the first time since we rolled over here into downtrend. First of all, you can see the pivots are always higher. The next pivot is always higher than the one before. This changes here, and it's a very, very critical signal. It's very important, and very often downtrends are initiated when the pivot structure changes. So at this point, we could start looking for short opportunities. You could start drawing flags and trend lines. We can wait for here the pivot rejection. And at this point then, when we have a pullback, we should expect that if the resistance holds, that we're rolling into a downtrend. We can also move over and use the Fibonacci's, right? We have the drawing the Fibonacci from the low to the high. This is our 100%. Now we are currently at 61.8. Ideally, I would like to see maybe a retracement back to the 50, which is also here the pivot point, and that would be quite interesting confluence. Let's get rid of this. It's a little bit too cluttered. You can see we are trading above the pivot, and now to have this as a bearish signal, we need to come below the pivot and reject it. It's okay if we overshoot the pivot. We do that even during uptrends. We sometimes get below the pivot, but we bounce back. And that is then the signal. Now let's see if we can get this as well going forward. And here on the bearish side, we move lower, move lower. Okay, we have a triple top. Now it looks quite interesting. And at this point, it's probably here where the market has a good chance of rolling over. We make lower highs, activate the Bollinger Band. You can see we're failing to reach the upper Bollinger Band. At this point, it's very clear that the Bollinger Bands seem to have shifted. We are now not able to reach the higher one. We are able to trade into the lower one for a long time. Another thing that you could then do is a lot of traders, they wait then for the market to move back into the lower Bollinger Band to initiate a trade. Also an idea that you can test, right? So you have many options here depending on the trading style that you want to choose, the tools that you are comfortable with. You can really pick the tools here that you feel comfortable with and that maybe you've used in the past. And then you can see we have a break and retest at the structure. And this is then signaling and initiating the new downtrending leg. So either you trade a breakout, a break and retest out of those structures, and that is typically where you find your best trend following opportunities. And then you can see the trend unfolds on the way down, and you can see very interesting trade study. So now let's look at a complex trade study, and we're going to focus on different concepts, different tools, so that by the end of the video, you'll have a very deep understanding and you've explored many different concepts. So what we can see here is clear that we have a huge push here to the downside and a very strong push within just a few hours. The market moved a substantial move. However, what happens afterward that for now, the market seems to not be able to sustain this move. We do have our low here and we do have a low here. And obviously you can see if we compare to the previous low, the distance between the lows is significantly different. And what this means is that if you add an RSI, here, for example, you will see that this gives you a divergence. You have lower lows here on the price action and you have higher lows on the RSI, which is a divergence because the indicator and the price action are doing two different things. And that's what we call a divergence. So the indicator tells you also that the strength that the market showed here didn't continue to lead to more strength. So it seems like we are fading strength and we're losing strength. That's a very important point, but obviously it's not enough to go along right away. It's just the first piece to the puzzle. And if you want to trade a successful trading strategy, one of the most important concepts is that we have this concept of confluence, that we try to look for many different signals and criteria that signal and confirm a specific trade idea. So if we are looking for a trend reversal, we want to see, is the market here really running out of steam? Are we really running into a new bullish trend? We have to find different signals that confirm this, but we also have to pay attention to what are the signals that could signal we keep going short, because there is the chance and a high likelihood that a trend will continue to the downside. And a big problem that many traders have is that they get too locked into just one trade idea, and then they forget that obviously the market can do something very different. So we have to look for positive confluence, which is confluence that would support our long trade idea, and we also have to look for negative confluence that would go against our trade idea, and that will keep you open for both possibilities and you will make much better trading decisions. So what else do we have is a exhaustion zone. So exhaustion zone, that's also the indicator. If you want to get this, check the link in the video description. We have this indicator bundle on Pattern Alpha. And this is a very interesting tool because the exhaustion zone, in this case, I've activated the weekly exhaustion zone. You get one of those zones every week, and the zone is based on what has happened in the past. So the indicator looks at how much did the market move in the past on a given week, on a given day, and then it projects this to the future. And if the price reaches such an exhaustion zone, it shows you and it tells you that, okay, now this is on average how much the market has moved in the past. It is not very reasonable to expect a lot more moves against the trend direction into the exhaustion zone. Of course, sometimes the market may be able to penetrate such an exhaustion zone deeper, but it's not super likely. And very often you will either see the market stop before it or right at the zone. But again, this is on average and it doesn't work 100% like nothing does in trading. But this is a very important piece to the puzzle because it tells us, okay, the market has achieved what it has done in the past, and at this point, more downtrending is not very likely. And at least the market now has a higher chance to trade sideways. It doesn't mean that the market will automatically reverse, but it's a very, very important point here that we also can consult. We can also look at our pivot points as we always do, and we have a bearish pivot point structure. So this would be for now a negative confluence because we are trading well below the pivot point, and at that point I definitely don't want to go short long, because it would be against the pivot point. We can draw our zones here, so we can look for support resistance. So we seem to have some zones in here that are quite important and that we need to be aware of. So let's keep going and see what happens, because we will get a new pivot point very shortly. And by the way, this is the daily pivot point. We are on the 15-minute time frame. So let's see, we are waiting, and you can see we still have the bearish pivot point structure, right? The next pivot point is well below the one before, but it is now much closer to the price action. And now it will be interesting. Can we stay above the pivot point? Can we reject it to the upside? And here's also a little level that we need to be aware of. It's a horizontal resistance level that we have here in this area. So let's see, what do we have? We keep following the price action, and at that point, I would say it's neither bullish nor bearish. I would not feel comfortable going short because we are trading in this range here, and I would not be comfortable going long because also here in the range, and we have not seen a lot of bullishness in the market. What I would like to see is maybe a break and retest. I want to see a substantial bullish move that would signal me the bulls are coming into the market. We can see that the bears are kind of exiting the market because they're not driving the market further down. Probably a lot of people who sold on the way down here are now thinking also about taking profits, right? And that also contributes to this sideways phase, the lack of bearishness. So let's keep going. So what we have is more sideways. We move below the pivot, which for now is a bearish signal. Do we challenge the lows here? Yes or no? Also important, keep track of, is the market able to make lower lows or not? For now, it seems like we are breaking here this level. Let's see what we happen afterwards. Poor break and retest into the lows. So at that point, a lot of traders are going to look for buying opportunities at such breakout levels. If you want to be aggressive at the horizontal resistance level, other traders, if you use pivots, you're looking for a little bit more of an objective approach, you could wait for the pivot retest. Also, we can consult our Bollinger Bands. We can see that the market failed to read the lower Bollinger Bands, and we reached now the upper Bollinger Bands for the first time since we had the downtrending push. That's also, as I've shown you in the previous example, a very important change in market sentiment. It's just one piece to the puzzle, and it's not enough. Just like any other tool and concept that we're using, one thing is never enough. We need to really build a robust set of confluence. So you can see what we have is a little bit of a struggle. Do we get the pivot retest? And you can see now the pivot has changed quite a bit, right? Now we have a bullish pivot. The pivot is above the previous pivot, which is definitely a bigger change now and a very different sign here. So now you can see we have a little bit of a contraction phase. The market is moving sideways here. Aggressive traders may look here for the entry on this. You could even go to the lower time frame. You probably find some inverse head and shoulder with the shoulder, the head and the shoulder here. You could even go to the 5-minute time frame from the 15 where we are now, and then you can see what do we have. Okay, we have the first breakout, and let's see if this is enough to get the market higher, and it is. You can see we break out afterwards. The head and shoulders breakout could have been traded. You could also wait for a little bit more conservative traders who don't like to get in below previous highs. Although this is now not a huge high, there's nothing, when we look left, you can see if I extended left, there's nothing here really that would signal, okay, this is a very important level except for this one swing high. So I would not put too much emphasis on that, although I know some traders do, and they would wait for the market to clear such a high. Totally fine. You could wait for the market to push, as I've shown you in the previous example, to push into the outer Bollinger Bands and use that as a trade entry example. Or you can see the head and shoulders that I've drawn here, break and retest, liquidity run, and then off we go. So you can see how we were slowly able to stack the confluence. We have here our exhaustion zone. We have here the change in the pivot structure. We had the divergence. We also have here obviously the trend line that we are breaking. We have the break and retest of this zone that we are having here. And everything is coming together that is helping us to understand there is a very high likelihood of the market turning bullish versus bearish. And that's really the key for any trading strategy, that you find those confluence and that you're able to combine confluence. You don't just use one tool, you don't just use one moving average, you don't just use the trend line or horizontal level, whatever it is. You need to really build a sophisticated trading idea, and that you can lay on top of other markets, and then you will be able to find more of very similar patterns that you can trade over and over again, and so build a robust approach for the long term.